Hello, I'm Neil Whelan, and welcome to the Wesleyan podcast. In this episode, brought to you by Wesleyan Financial Services, Regional Manager Simon Cosgrove talks to Monica Pacult about the recent autumn budget and what it might mean to dentists across the country. They'll cover the big issues like the changes to employers' national insurance contributions and capital gains tax, as well as other measures you might have missed and how they will impact on the day-to-day lives of dentists and their practices. As always, this podcast is for information only and doesn't provide financial advice. But if you do need to talk to someone about your finances or those of your practice, I'll be back at the end to tell you how to get in touch with us. And with that, I'll hand you over to Simon. And first up, Monica.
Hi, Simon. Thank you for joining us today.
Hi, Monica.
So, Simon, we've just had Labour's first budget in 14 years and what was probably the most highly anticipated budget in many years, with Chancellor Rachel Reeves announcing a number of changes from tax rises to spending cuts. What were the key announcements in the budget?
I think key is the operative word there, because there were quite a few. So the main ones I'll run through very briefly. First one to be aware of is that income tax rates are unchanged at the moment, and also the banding for the income tax rates, they're frozen until 2027 to 28, after which they'll then be operated in line with inflation. One of the big ones as far as dentists and dental practices go is the employer national insurance contributions. So the employer rate has increased from 13.8% to 15%. That's coming in from April 2025. And the threshold at which employers pay national insurance contributions has also been reduced from £9,100 to £5,000 a year from April as well. So that's quite a big one, which I'm sure we'll come back to a little bit later on. In terms of other changes, we've got capital gains tax. So that's paid on profits on the sale of business assets. That's increased from 10% to 18% for basic rate taxpayers and from 20 to 24% for higher rate. The annual exemption remains the same at £3,000. One of the big ones for owners of dental practices is the business asset disposal relief. So that's been a big change. So that's allows gains to be taxed at a reduced rate. So up until now, it's been 10% on the first £1 million. From April 2025, it's going to be 14% CGT rate rather than 10. And then the following year, so from 2026-27, that's going to increase again to 18%. So that's quite a big one as far as dental principals are concerned. Inheritance tax, but the banding for inheritance tax of 325, that's the standard band, is going to continue to be frozen until April 2030. But again, there is something quite significant that has changed in that personal pensions and pension funds and death benefits are now going to be subject to inheritance tax from 2027. Just briefly on a couple of other measures, private school fees for dentists who may pay for private schools or going to pay for private schools for their children. VAT exemption has been removed. Stamp duty has increased for second home buy-to-let properties. That's increased from 3% to 5%, and that came in pretty much immediately. So that came in on the 31st of October. And finally, there's been an increase in the late payment interest rate charged by HMRC on any unpaid tax liabilities. So they're the highlights. There's obviously quite a number more, but those are probably the most relevant as far as dentists and dental practices are concerned.
Yeah, a lot has changed, hasn't it? So how do you think this will impact dentists, and are any of the changes, will they specifically impact practice owners? What's your thoughts on that?
As I mentioned earlier, the employer national insurance one is going to be one of the big ones, because it's going to impact how much, well, based on practice staff. So it's going to be higher wage bills for practices. that's obviously going to put pressure on margins and take home pay for practice owners. So that's quite a big one. Not just that, it's going to reduce practices' ability to invest in their facilities. So they've got maybe fewer chances to grow, to increase their capacity and offer more services. So there's going to be less money within practices just because of this employer national insurance. The freeze on income tax bands is going to have an impact as well. So although it sounds good in practice that the income tax bands have been frozen and not reduced, then it may mean that more dentists are going to become higher rate, additional rate taxpayers. That could lead to some of them either reducing their working hours, maybe even retiring, just considering how much tax they want to pay. The business asset disposal relief. So for practice owners who are looking to sell and perhaps retire, that could be quite a serious blow to them. A lot of the dental practice owners that I speak to are counting on the value of their practice to fund their retirement or to form a big part of their retirement funding. So having to pay an increased level of capital gains tax on the sale of the practice is going to have an impact on their retirement. So practice owners might need to revisit their plans, recalculate whether a sale is now going to achieve what they want to achieve in retirement, and whether they need to get additional funding from elsewhere. It could also influence maybe younger dentists who are looking to start a practice or buy a practice and grow their own business. So they might decide against that now, and that could lead to even more problems accessing dental care. Final thing I think that's going to impact some dentists is one that wasn't really trumpeted a lot in the media as a whole, but this is around pension benefits now being included in estates for inheritance tax reasons. So up until now, any funds in a in a pension fund have been exempt. They've been deemed to be in a trust, so pensions could pass down generations to children without being impacted by inheritance tax. Now they are going to be included in the count in the estate. So for many people, the pension is one of their biggest assets. House, residential home is obviously the first one, maybe a dental practice for practice owners. But if you've got a few $100,000, maybe even more in a personal pension, and that's suddenly going to be potentially subject to 40% inheritance tax, that's almost going to halve the pension savings. Now, it's important to remember that pensions are designed for your own retirement, so it doesn't negate the viability of pensions as a way of saving for retirement. So it just might be a way of rethinking how you use the pensions, because up until now, some people have kind of left their pensions until the last thing they access for retirement. They've been accessing ISAs and savings first because the pension could be passed without inheritance tax. But now it may cause some people to rethink their plans.
Yeah, that last point's a very important consideration. Do you think there's anything dentists should be thinking about at the moment with regard to their financial planning? What would you suggest?
I think have a look at the taxable income is going to be one of the big ones. Just with the bands not changing, them being frozen. So maybe reducing taxable income. So that could be maximizing ISA contributions, which is free of income tax, free of capital gains tax. Pension contributions are very, very tax efficient. They can help to reduce taxable income as well. And just making sure that got the most tax efficient business structure. So a lot of dentists have a limited company in place for their income. So that means that they have more control over how much money they take out of the company. That's a question for an accountant. So that's something that perhaps some dentists can talk to their accountant about. In terms of the business asset disposal relief for when you sell a practice, that's something that needs to be taken into account in projections. So any decent financial advisor should be running a cash flow model for their clients. That just means that you can project forward exactly how much someone is going to need over the years, how much their assets, how long their assets could last if they're taking income from it. So just making sure there's going to be sufficient in the sale proceeds after capital gains tax in conjunction with their pension funds and savings, just to make sure that standard of living in retirement is what the dentist wants to be. Other thing, because of this, the pensions now being included in estate planning, there may be opportunities to think about how pensions are accessed now and possibly placed in a more inheritance tax friendly investment, such as something that's held in trust, maybe gifts, lifetime gifts from the pension. Now, obviously, taking money over and above the tax-free lump sum from a pension is going to add to an income tax liability as well. So it's something that people need to be really careful of. But yeah, just thinking of ways of maybe more creative ways of using pensions. It's made inheritance tax planning, retirement planning a lot more complicated because there's going to be a need to be a comparison between the inheritance liability of leaving the funds in a pension compared to the tax incurred for withdrawing the funds. It's incredibly complex. There's allowances, there's exemptions. So professional advice from financial advisors, from accountants, is going to be even more important than usual. The only other thing that springs to mind from a dental perspective is, and this is for both associates and principals, is to give more thought to the impact of having to fund a locum. So most associates will have a clause in their contract that states that if they can't work, it's their responsibility to find and pay for a locum. This, over the years, with all the dentists I've spoken to, a lot of dentists say, oh, my practice has told me that I shouldn't worry about it. They would look after it if I can't work. With this budget, there's going to be increasing financial pressures on dental practices, particularly following the increase in the employer national insurance. So it might be time for both principals and associates to consider how realistic the practice funding a locum is going to be. It is a contractual obligation on the associates, so practices are well within their rights to insist that associates fund locums in the event that they can't work. And that could be hundreds of pounds a day, a couple of £1,000 a week even. So that's something to be aware of. The financial pressures on practices may lead to associates being asked to fund locums. The other side of that coin, which it's been hovering around for years, but if HMRC focus more on the self-employed status of dentists again, and maybe they investigate and they decide that associates in a practice should be classed as employed rather than self-employed due to the contract or due to the contract not being honoured, i.e. the practice funding a locum, then practices may find even more employer national insurance is going to be imposed on them because then their associates are classed as employees. A strong defence against that is for associates to have an insurance policy that would pay for a locum if they were unable to work, similar to how an income protection policy works. But it was something that sprang to mind to me when I heard about the increased employer national insurance. So I think in summary, with everything with the budget, it's important that practices and associates talk to specialist financial advisors who understand how all of the budget impacts on them and the practice, how to mitigate any risks, and how to readjust their finances as a whole.
Simon, that's a lot of useful insight there. Thank you so much. Unfortunately, that's all we've got time for today, but I hope you can come back on the podcast show again soon. And thank you so much for sharing all that useful information with us.
Thank you.
And that's our show for this week. Thank you to Monica and Simon. If you are looking for expert financial advice for you or your practice, go to wesleyan.co.uk, where you can book an appointment with one of our specialist financial advisors. As for finding out about Wesleyan more generally, you can find us on what used to be called Twitter, Facebook, Instagram, and LinkedIn. And if you found the podcast useful, You can like and subscribe to us on all the usual platforms, as well as find us on YouTube, where there's a whole library of videos covering a wide range of financial planning topics. But that's it for now. So until next time, thanks for listening.